Welcome to This Open House, where we talk about all things real estate related, with your hosts David and Rebecca Guthrie of the Hacienda Group at Long Realty Company.
Welcome yet again, David Guthrie, Hacienda Group, Long Realty Company, coming at you live. Today is April 24th, and I am here with my gorgeous wife, Rebecca Guthrie.
Hi, guys. How are you?
We hope you all are doing very, very well. It's been a long year this last week. We've had a lot of things that have...
It has been a long year this last week.
We've had a lot of things that have happened. I mean, one of the things, little plug for one of our local clubs. I mean, when you guys hear this, you might not want to join. We're kind of wondering why they let us in, but we're now members of the Sands Club.
Arizona Sands Club.
Arizona Sands Club. Now, that is pretty cool, we got to say.
It's right over, I'm not a football person, so this is going to sound really bad, but it's right over where they put the balls in. Is that called the end zone? I think it's called the end zone.
So it's very, very, very high up in the stand, like the best seats in the house you can get. However, you know, they do give it back to the university for the home games there, but just an amazing group of people, and the value that you get is really
right. And this isn't even sponsored by the Sands Club. We're just
this is not sponsored. We're not getting any special perks or anything like that, but you know, we hope to see you guys there because we're going to be, you know, doing some things over there and different client appreciation stuff and just enjoying the atmosphere. But gosh, that food was amazing.
Food was really good.
So
but we've
good.
got really good food in Tucson. Like, let's be real. There's a reason that we were the first United States UNESCO gastronomy city in America. I mean, we've got fantastic food.
Absolutely.
It's better than food almost anywhere else.
Which makes it really hard on my pocketbook out here because, as our loyal listeners know, I am the one who cooks in our home. And so poor Rebecca and the kids, you know, usually somebody's always throwing a tantrum saying, boy, this is the worst food ever. But it's just because we came from, you know, Tito and Pep, and John Martinez made this amazing dish, and the kids are like, Dad, come on, what are you trying to do? But the thing is we nobody can do that all the time. Well, some people can.
It's true.
Anyway, so thank you guys for joining us today. It is another exciting week, and we're just getting so many different questions from buyers, you know, like and
even sellers. I mean, even sellers. We're going to talk a lot today about what we always talk about the housing market, but we're going to really dive deep this week into, are we in a bubble? Are more foreclosures coming? You know, is this going to drop? What's going to happen? But first, we're going to do our housing report, which we do every week.
Yeah, so stats, fourth week of April 2021. Currently in the city of Tucson, we have 614 active listings. Slightly down from last week of 667. So just a little decline there, nothing to worry about too much. But, you know, again, I've used the analogy of, okay, you're in a Sahara Desert, you've got 10 people, and there's 1 gallon of water. Well, that's kind of what it feels like right now. But the good news is that while it may feel like there is a lack of supply, what we're seeing here, when I give this stat of current active listings, this is what is currently available to make offers on. That doesn't mean that all of the buyers last week who had other homes, they're currently under contract, and these homes are moving into what we call pending status, and then eventually they make it over into closed status. So, you know, what's coming in is going out.
Right.
But we are seeing buyers needing to be patient. We're seeing multiple offers, you know, just take place here. And, you know, there's a lot of debate on, should you pull out your inheritance in order to spend, you know, $50,000 over sales price or asking price,
right,
in order to get the house? And the answer to that is, it really depends.
Right. What are your goals?
What are your goals? What is this home going to do for you? You know, those are all things that we're looking at. Prior 7 to 12 months, the median sales price in the city of Tucson, taking all of the listings, was $265,000. it dropped down a little bit. Believe it or not, it did drop down 4 to 6 months to 250. That's probably because a lot of the lower priced homes, a lot of these condos and a lot of these just different properties that people have been holding on to have finally saw a good opportunity to get in and get some of these sold. So that doesn't necessarily mean that we're having homes decline in value or anything like that at all. It's just there's a wide range of price points available. And when I take these stats, I'm putting everything together on that. Last 3 months, though, it did shoot up 264 with the days on market still of 5. Properties are easily getting 100% of list, if not more. Okay. Right. Rents in Tucson, we're still looking about $1,460 a month for your 3-bedroom, and you're still about $255 for your median sales price of a 3-bedroom with the 20% down payment. Interest rates kind of being about where we're seeing them. Consult with your lender, vary depending on credit score and all of those other things. You're looking at about $1,146 a month with a savings of about $314 a month. So we were still seeing today, this week, savings over buying over renting for sure, and we're seeing still a lot of pressure from all different market segments coming in, putting pressure here on Tucson. Let's go over to the United States dollar. Annual inflation rate was released here. We're looking at for March 2021, 2.6% after rising 1.7% previously. So we did see a pretty big jump up. It was in the 3s back in 2011. Then we went through a period of some negative inflation, actually, or deflation rather, and now we're shooting back up into that range. So if you look at the historical inflation charts, those numbers are all over the place, depending on what year and what was going on there. Next inflation update is scheduled around May 12th. And it's going to let us know what that rate of inflation over the 12 months ending in April will be. If you need to reach us for any reason and you would like to get some more information, maybe you have a show idea, questions, would like an actual valuation on your home, not some algorithm, you can go ahead and text or call at 520-462-2611. That's 520-462-2611. You can also email us, info@thisopenhouseshow.com, or you can go to our website, full MLS search capabilities, www.thisopenhouseshow.com.
So we've been getting a lot of questions about, and we do this every week, but are we in a bubble? What's happening? Interest rates are going up. What's going on? I read an article last week from CNBC that was talking about a search. Is the housing market going to crash? According to Google, has spiked 2,450%, which means people are really wondering. Because we all have memories of the housing market crash a decade ago. I mean,
sure.
All adults have that memory, and even new young adults have that because they were children watching friends and family lose houses.
And can I just pause and speak to that for a second? Some of us probably still, I think it's safe to say, are still have trauma that we are going through on that. Maybe you had lost your home during that cycle. You were 1 in 30 homes that had a foreclosure notice attached to it. And unless you were one of those 1 of 30 people, which is a lot of people, you really don't understand, what it is like to wonder, when am I going to not have a place to live? And there's so much wrapped up in homes and in housing. Sometimes people make financial decisions that on paper, anybody could look at and say is bad, but, they don't understand, well, that has the tick marks on the wall of my child as they grew up, and that child is no longer with us. Right. There's so much emotion wrapped up. From my perspective as a real estate broker, I never want to see that again. Right. That was one of the worst things you can imagine.
It was awful.
And going and being somebody who represented banks in their portfolios and having to go out after a property would officially be reverting to the trustee through the trustee sale process. The owners still lived in these homes. And what did they want their real estate agents to do? Well, they wanted us to go knock on that door and let these people know they're no longer the owner of these houses, and we need to make arrangements to go get them into the next space and into the next place. And, some of those went differently than others. But I tell you, when kids are involved, I have seen so many stories in those things. When we talk about, are we in a bubble? I don't ever want to be in that position again. And I don't really know any real estate broker who is a professional, who loves this industry, who loves serving their clients, whoever wants to look back on this time and think, what did we do?
Right.
What's going on here?
Right. So after the break, we're really going to dive into that because I think that there is a real fear. I mean, if over 2,000 percentage spike in searches on that, I think shows that there is a real fear. So we want to address some of those fears. We don't have a crystal ball. We don't know, but we do have some suggestions and some advice. So we're going to take a break. And on the other side, we're really going to address those questions. So don't go away.
Are you interested in the real estate market? What does low inventory actually mean? Funny, real-life real estate stories and things you should never do if you're looking to buy or sell a home. Join me, David Guthrie, and my wife, Rebecca Guthrie. We are full-time real estate agents with the Hacienda Group at Long Realty Company for This Open House on Saturday mornings at 11 a.m. on 1030 The Voice, where we will discuss all this and more. That's This Open House on Saturdays at 11 on 1030 The Voice. Welcome back yet again. David Guthrie, Hacienda Group, Long Realty Company, with my wife, Rebecca.
Hi, guys.
Guthrie. And if you want to reach us, you can do that anytime, day or night. I'm not saying you'll get a call back at midnight, but you'll get a call back during the normal
business hours.
Yeah, which is 11:59. No, 12:01 to 11:59 p.m., right? There's a 1 minute.
Oh, yes. Okay, I get the joke.
break,
Haha, you're
right?
so funny. That's not true.
Right.
If you call me, I will be very upset. But we will return calls.
Well, okay. Yeah, we'll return calls. 520-462-2611. Feel free to call, text message, whatever you need to do. info@thisopenhouseshow.com and www.thisopenhouseshow.com.
So before the break, we were talking about people are really wondering, are we in a bubble? What's going on? The housing prices are going up so fast, so high. What is happening? Well, we talk about it every week, but one of the things, there's a Wall Street Journal article last week that talked about the United States as a whole is short 4 million housing units. That's a lot of housing units.
4 million.
It's a lot. It's a lot of new immigration coming in. It's a lot of kids wanting to move out. There's just a lot of missing housing. And a lot of that is because after the housing market crashed, builders didn't build new inventory because there wasn't a big market for it, and they got really badly burned in the last housing crash. And the other thing is a lot of builders went out of business because they had half-built houses that when everything crashed, nobody bought. And so the thing is that yes, there are local builders, but a lot of the new home builders are national brand new home builders. They build in all market segments. So even if they weren't burned in one market segment, they were burned in another, and it has impact. Let's say, for example, ABC Home built in Florida and in Arizona, and they weren't super burned in Florida, but they were really burned in Arizona. Both Florida and Arizona are going to be impacted by that burn because the profit across the board has been hurt. So new housing hasn't been, and now that there's this huge increase, we've all heard about supply issues. Well, a big part of it is no longer the fact that we can't get stuff over from overseas where it's being manufactured. A big part of that right now is they can't unload the ships fast enough. And there's a finite number of shipping containers in the world because that's just how it is. And so in order for you to have empty containers to get back to get more stuff, you need to offload them here. But because different ports on the coast have different rules for COVID in terms of how many people can work the shifts, and they laid off a lot of people, and now they don't have enough people to work those shifts, and there are fewer people getting stuff off the ships onto the trucks or onto the trains to get them to where they need to go. There's a huge backlog. And then you have to wait for the empty shipping containers to get back across. So it's now no longer we don't have the stuff. It's more getting the stuff to the right people. So there's issues in terms of supply chain for creating the housing units. So you have a huge dearth of housing units. You have the lack of people being able to get supplies to continue to do it. You have the fact that builders still don't want to overbuild because they don't want to have the kind of issues that they had with half-built inventory. I mean, you've seen pictures of them. You've seen it. You remember this. We don't want that. And then you have interest rates, and you have the fact that spring is traditionally a buying season anyways. Why? I was surprised. I should have known this, but I was truthfully surprised. I was looking at the stats, and June is the highest closing month in Arizona. It's hot in June in most of Arizona. People don't really want to be moving, but what happens in June? Well, school's been out for long enough, and it's right before school starts again. So it's that sweet spot. June and the first half of July is that sweet spot to move and get settled after school ends and before school starts again. And even if you don't have school-aged kids, that we still sort of move in that cycle. And so there's all of these things coming together. The reason that David and I, in our professional opinion, don't think it's a bubble like it was before are a couple. We have a couple reasons.
Yeah, I mean, if anything, it's a different kind of bubble.
Right. I mean, if it's a bubble, it's a bubble across all asset classes. I mean, look at the stock market, look at housing, look at price, just across the board.
Look at the various currencies around the world and how what are these backed by? What's happening here? So, if anything, it is a different bubble. And I don't know about you, Rebecca. I'm more concerned of the long-term things like, food instability and water and all kinds of stuff than I am necessarily of we're going to turn around and our house prices are going to be falling like rocks.
Right. But we don't see it coming the way that it did before. And there are a couple of reasons. And we've talked about some of them, but we really wanted to condense it into one show. The first is the lending standards are significantly stricter than they were before.
They're kind of annoying, actually.
So
we're buying and refinancing and doing all this stuff right now, and I tell our buyers this all the time. I hope you saved your first grade report card, and I hope you have your dental records and all of those good things. And I'm only kind of half kidding.
Right. So the lending standards, the liar loans that were existent that led to the housing crash of 08 and 09 are not there. They're
Which is a good thing.
Much stricter standards. So that is a good thing. The second thing is that...
Well, hold on. Especially if you are self-employed.
Yes.
Like self-employed, these kind of, let's verify income, let's verify you're actually able to repay, do you fit into the real Fannie Mae, Freddie Mac boxes? We're very happy that these are there, but they're tough.
Right. So that's one thing. This is the lending standards are much higher. The second thing is that we're not seeing, even with what happened with the pandemic and the economy and all of the things that we all know, you're not seeing a huge wave of people in forbearance for mortgages. And even those people who have check the box saying, yes, I'd like forbearance, a lot of them are staying on top of their mortgage payments anyways. The other thing that I've heard a lot of people say is, well, the renters with the rent memorandum and all of that stuff. What has happened in what we see and when we talk to property managers is we've done a really good job of explaining to renters, hey, This does not mean that you don't have to pay rent. What it means is you don't have to pay rent right now. But the minute that this goes away, you're going to owe a year's worth of rent. So do you want to pay me $12,000 all up at front, or do you want to pay me $1,000 every month and stay on current?
And furthermore, when we have your eviction notice ready in 12 months, because these landlords, the majority of them are just small mom and pop. They're normal people. They're your neighbor next door.
The average landlord owns 2 houses.
Yeah, we're not talking about the big bad 1%. These are families, regular people having these rents. So they need to be able to pay their bills and make sure the house doesn't deteriorate. So anyhow, the tenant really needs to look at it like this. Well, okay, I'm going to have to pay at some point. If I don't, court, eviction, and there's less than a 1% vacancy out there right now. So, on rentals, well, where am I going to live?
Well,
and good luck finding somebody to give me the home.
Right, but not just that, but also in Arizona, that rent payment follows you. It becomes a personal debt that you will have to pay off.
Right.
And then you've got an eviction on your credit report. I mean, it's really not the incentive to not pay rent, to pay rent is very strong. So we're not seeing a lot of people. Yeah, there was some time, but now there really isn't a lot of mom and pop landlords who aren't being able to pay their rent because of the you don't have to pay rent. So that's another thing is the big waves of foreclosures that people have been asking about. Those really aren't coming.
We see currently.
The second thing is that because the housing prices are going up, most people have equity in their house. And because they have equity in their house, and you can look around and see that the inventory is tight, if they do have to sell for whatever reason, it's not going to necessarily cause a foreclosure or a short sale because there's still equity in their house. They're going to walk away with something. That's one of the reasons that you saw all of the refinancing. I mean, that's part of it is people aren't moving. They chose to refinance and do remodels by pulling money out. So they've made the house more what they want it to do, and then they don't have to sell, and that tightens the inventory.
Because it's still cheaper for them to own than rent, and refi, pull cash out, make their house the way that they want to make it. And so, yeah, we have all of these factors there. And for those who are really desperate, trying needs, pulling cash out of their home by selling it, even though you're going to maybe pay more a month, that could be a decision that they'll make in order to survive. But they're going to have a cash injection in their bank account. And a lot of that, depending on how long they've lived there and if it's their primary residence, they may not even have a capital gain tax on it. So there's a lot of positivity. But again, all real estate's local.
Right.
We're talking some bigger
Tucson
scales, when we say, oh, there's how many million?
4 million.
4 million.
That's the United States.
Yeah, we need 4 million more housing units in order to feed the demand. That's across the United States. Here in Tucson, Arizona, in all price points, it doesn't matter if you're under 100 or over 2 million. This is a tight market,
right?
And there's a lot of pressure on this market. And combined with all the things Rebecca was talking about, I just don't see how are we going to turn around anytime in the near future and all of a sudden, oh, there's the cliff. With that said, nobody really knows when the top of any market is. We do know markets go up, they go down, things change. This is the most important thing. And we say it again every week. Patience is your best friend.
Right.
And you really need to decide what that looks like for you. You're probably in a situation to where you've never had an offer rejected. You've always been able to find a house you wanted and get it done, and you haven't felt like it was too out of control. This market is trying a lot of people. And if you get sucked up into the hype and all of a sudden you're paying $20 for that apple as opposed to what it's worth, $1.50 a pound or whatever. If you get sucked into the hype, you could end up looking back and regretting. So keep calm.
Yeah.
Stay patient.
It's an interesting market. It doesn't feel to us like it's a bubble. We're not we don't have a crystal ball. We wish we did. But from where we're sitting, there are reasons to say, yeah, it's a little crazy right now, but it's going to calm down.
Now, if any of our listeners do have a crystal ball,
we would love, yes, please.
I would appreciate a call at 520-462-2611. That's 520-462-2611. And please let me know, and lottery numbers would be much appreciated, okay? And if you have a crystal ball and you dislike this show, the quickest way to get me to retire is giving me those lottery numbers. So, guys, 520-462-2611, info at thisopenhouseshow.com, www.thisopenhouseshow.com. We'll see you next week.
Thanks, guys.